Alright everyone, here we are with another video with Invest for Tomorrow, and to all the first time viewers and investors, welcome to the channel, and to all the subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watch this video. It helps out the YouTube channel, and to stay tuned on in towards the end because I have a ticker symbol you won't want to miss, and you definitely want to add it to your watch list, so stay tuned on in for all that information. So here we are with ZOM stock, Zomedica Corp, hitting newer lows. Now yesterday, if you watched yesterday's video and even the days before, we talked about some articles and some of the support levels that were mentioned. Now, some of the support levels that were mentioned was that this could find support around 152, 153. It's currently sitting at 156. We're going to see our new support levels and resistance levels based off of today's price action, and we're going to talk about this a little bit broader. So let's go ahead and get right to it. So I've talked about these support levels here. We have 144, right? Excuse me, 140. And then we have down here at 133, right? Those two support levels, super important to keep in mind and pay close attention to. I want every single investor and viewer to be aware of that. Those are the two supports that you want to watch. If they get broken through, we could be on our way down to newer lows, closer to $1 or possibly even closer to 80 cents. But right now, we don't need to worry about that just yet because we haven't even gotten near those. But we're getting closer to the 140 mark, and that's important. But the article stated that we were going to find support near these levels where we're at right now, which we're going to look at right now in just a moment. So the first thing is the 50-day moving average. 50-day moving average is 181. Anything below that is bearish. Anything above that is bullish. We've been in bearish territory. We had a slight tug of war here and here, back on the 18th and the 19th, and other than that, we've been torn down by the bears. Now, another thing too, you got to think about it. A lot of the swing traders, day traders, and the ones that were just trying to ride this for the momentum are leaving. So when you are actually long or bullish on a stock, this is your opportunity to steal those shares because they hyped it up, they pulled it upwards, and now they're leaving. But that's only if you're long. If you really believe in the company. I know there's a lot of investors and viewers that believe in this company, and I respect that, and there's so many reasons why to believe in the company, but also you want to know the risk, which is they're not profitable. They need to turn profitable with true forma and prove themselves to investors and institutional investors before this can actually ride up to newer highs and newer resistance levels. So I do want you guys to be aware of that. So here we are. We have our support, and our support's 152. Anything below that is much more bearish. I'd watch how this is reacting between 152 and 140, and if the bulls are trying to reappear and bring it back up. Super important. If it breaks through 152 and 140, we have 133. That is the lowest point that we've seen in this whole entire bullish run and pullback, right? And sideways movement since this run. So you want to keep that in mind. So 152, though, is the first support level to watch. Now, since this was so bearish, there's no true resistance level where the bulls actually appeared, except for this point right here where they tried to level it off and the bears continued tearing it down. So I'm using this point here. It's completely optional because the true resistance level right now, based off the chart's movement and where it's at, is the 50-day moving average, because that's what needs to be crossed for the bulls to get back into bullish territory. But I like to use this point here. Like I said, it's optional to dissect the chart and understand the momentum and movement of the chart. So this resistance level is 171. If that gets broken through and turned into a support, the bulls are on their way to newer highs, new resistance levels if they can pull away from it. But it does not signify or guarantee the bulls are going to cross 181 and get back into bullish territory. I do want every single investor and viewer to be aware of that. This is just an indicator to let us know where the momentum is going. As always, guys, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community. And don't forget to hit the like button to let me know you watch this video. Stay tuned to the end because I have a ticker symbol you won't want to miss. And there's no better time than now to be adding these ticker symbols to your watch list while they're going down. Stay tuned. Alright everyone, here we are with another video with Invest for Tomorrow. And to all the first time viewers and investors, welcome to the channel, and to all the subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watch this video. Stay tuned on in because we got a lot to cover. And let's talk about how this is speculative, but also an opportunity. So the first thing is I have neo.com pulled up. Definitely go check out the website so you can see more about their product and the opportunity that lies with this company. So let's go ahead and see their chart. And their highest was almost $67 at some point, and their lows recently were 31, and we're sitting at 37. So I mentioned this one over at the Patreon earlier today, and I blocked out the other two stocks because it's only fair for the Patreons. So if you're interested in knowing live updates weekly, what stocks I'm watching, and throughout the week as opportunities like this one present themselves, you join us and join me over at the Patreon to know more about it. But let's go ahead and read this. So speculative stocks, but some interesting ones to watch. The reason why I said speculative, because there's some tensions right now with Chinese and U.S. relations, which we went through that last year. I went ahead and talked about, I don't know if you remember last year's tensions, quote unquote, but the delisting and the auditing and the 3 years till they're going ahead and get delisted or whatever it was the case be, it was hitting these stocks. Now they are speculative because these tensions, quote unquote, could actually hurt the stocks. If these tensions get worse or more serious, it could hurt the stocks short term. When I say short term, the rest of the year, the next coming months, or the next 2 years until things kind of loosen up or get a little bit better. But if they're temporary pullbacks that last a few weeks or days, these are opportunities before us. So I went ahead and said it. NIO is called the Tesla of China, and NIO operates in China's premium electric vehicle market. Like, this is the top of the line when it comes to EVs in China. They have a following, which their business models is impressive. And what I mean by that, they have a following, they have a cult-like following, and they're doing a really good job with their business model of making people have to come back to them for a battery swap. That's like impressive, okay? They're the only ones mastering this and taking advantage of this in their sector. It is sitting close to $37 and has hit a high of $67. So let's go ahead and go over here to see the article, and I'm going to go ahead and kind of break it down. So there's like a $30 difference right now, right? And I'm going to break down those $30. Hypothetically speaking, I'm not a financial advisor, and I am not here to tell you guys to buy, sell, or hold any positions, but I am here to enlighten you guys and open your perspective to something you may have overlooked or not understood or seen before. So this article talks about every reason why NIO is volatile and it's stumbling again today. So let's look at the three main reasons. The first one, treasury yields. That's temporary. That's happening to the whole market. This is not just NIO. China-US relations. This could be temporary. This is what's making it very speculative right now. And the third thing is chip shortages. Okay? Chip shortages are not that big of a deal. This is temporary. This is going to get passed over. It's hurt the entire auto sector. So out of these three situations, two of them is happening universally in the market. And this one's universally in the entire auto sector. So chip shortages, we can get past. Treasury yields, we can get past. Now, for Chinese EV maker NIO, that's certainly not bullish for the company's American expansion plans. Add in broad delisting concerns and things are tense. This is all fear, right? Based off of this right here. So what is being said here? China and U.S. relations have taken a beating in recent days. U.S. and Chinese senior officials met for the first time last week under President Joe Biden, and conversations were less than friendly. Indeed, there's a lot of baggage here between the two countries. President Donald Trump's trade war and Biden's Buy America stance have made Chinese and U.S. trade headwinds. Once again, the talk of the town among EV investors. Okay, so when this is going on, this lets you know that you want to focus on U.S. EV, right? And something that a lot of investors didn't have was like a Tesla competitor within the U.S. market. Now, CCIV has came into the picture. Whether CCIV is good enough or not good enough, I think a lot of investors are going to feel more comfortable with the Buy America stance, right, than focusing on Chinese. That's why Chinese is speculative right now. But if I was to break down the $30 that we're losing here, and all of this was to hopefully recover and one or the other would damage it, this is temporary for sure. This is temporary for sure. And these two right here account for $20 that we've probably lost here. So this can jump back up to 57. Okay. Now what's going to hurt it the most to get back up to those highs, and this is hypothetically speaking, I just want you guys to open your perspective on how much this has been pulled down by a temporary setback. So there's about $20 right now that are missing by a temporary setback. Now this is the most important $10, and these $10 could actually cost the stock the whole entire $30 or even more, or worst case scenario, delisting concerns. And this is where the fear comes in, and you need to rationalize as an investor what's really going on. So this had the issue with the delisting, and they talked about it last year. It's going to take 3 years before they're audited or they have to prove themselves and so forth. Now, could these get delisted right away? I'm not sure if they can do an executive order or something like that, but there's tension. But you want to remember, last year's tensions were temporary. This year's tensions, if they're temporary, this is opportunity. If they last, then you need to rethink everything and watch it closely. That's what I'm saying. You want to add this to your watch list now. I don't want you guys to miss out on it. It's time sensitive, and the sooner you know, the more aware you are. But the whole issue is that a lot of investors, they love NEO, and NEO's way ahead right now than CCIV, to be honest. But a lot of investors might choose CCIV over NEO in the coming months and probably years. And that could be the next mini Tesla. Could be. But that doesn't take away that NEO has potential. Just NEO needs to go ahead, which is China, not NEO, situate all of this to not get into the delisting concerns and hopefully get the company to expand in America. But the longer it takes, the more market share it's losing to Lucid and to Tesla. And that's where NEO might just do well in China, and it's going to have a cap, right? It's not going to be able to go much higher because it's only doing so much within Europe and just Asian countries and not reaching out here. For investors to get even more bullish, they need to see it everywhere. Right? Think about it. That's how you need to watch this, but you need to start watching it now. Be prepared like a hawk to strike for your opportunity. As always, guys, thank you guys so much for watching. I look forward to seeing your guys' thoughts, and let's make some money.